It's a tough market, guys. Tough market. I hope everyone's holding up well. This week's been on hardbone. It's been on hardbone. I'm not gonna lie, but I gotta say, I'm officially thinking we're on the back half. Okay, we're on the back half. Now, I don't think the selling's done, but I'm pretty confident the AI bubble's not blowing up. I would say extremely confident. In fact, now that we've gotten the Microsoft earnings and the Meta earnings, um, and I think price action will clean up quite a bit from here, and that's great. Honestly, that's fantastic. Let's talk about the nuances in between. Actually, let's actually start with today's price action. They just did brutal traps all day, trapping people to the downside, then trapping them to the upside, and then this is the first sign of like panic selling into the close today was after this didn't hold the EMA convergence and blew through. And then that panic selling continued over into the Meta earnings. So as soon as Meta wasn't sunshine and rainbows, and and the delusional people who obviously I'm not gonna harp on it too much, but how many videos did I tell you? There's no shot Meta is selling excess compute. Excess compute is not a thing. There's no such thing in this market environment. Because you guys might remember, that was the big headline that caused this whole dramatic sell-off. Was market said excess compute gapped out, and then shove all the price action to the downside, and people are saying it's over, it's game over, they overbuilt, there's excess compute now. And I told you, I've made so many videos. Dumbest thing ever. Turns out, dumbest thing ever. Meta's like, tons of people want our compute because there's huge demand and not enough supply, but we need our compute, so we're not going to sell it. The people who are surprised by that on social media, unfollow them immediately because I don't think there was anything more, I don't think it's possible for something to be more obvious than that. So, regardless, I think we did price action really well today. You know, obviously I was buying long positions, kind of into the selling, and even bought some SPX calls down there, the lows here into the event. I didn't think the selling was convincing. I thought, rate hike expectations were absurd. They're like over 30% chance of a rate hike. I thought that was a ridiculous projection, and made some good money on those. Made some good money on some MU calls, SKHY. Made some money there, and then when the buying got this over exaggerated, it's like I had intended to swing some of those, but when you're this exuberant and this far over an EMA convergence, good idea usually to take profits and then see how you react. If we had defended this, that would have been a moment to add back in. We didn't get the defense, and the market puked. And then the big trade thesis. There's two big. I basically have two like major positions on right now, and I had three, and I closed one. We're going to talk about that. We'll get there. But the two big positions right now, the two largest positions right now as well, are Apple and Oracle. Thesis behind Apple was we're not getting confirmations on the daily time frame. We see this at all kinds of tops. It's like one of the clearest setups from the playbook. We're looking for exhaustion on the daily, which we know we got an indecision candle. Now this is starting to look like an evening star on the daily. So we want to see 334 at a minimum. I think we're actually going to come back lower than that. Because we are setting new highs, but not getting confirmation from the RSI. I don't believe the weekly is confirming either. Yeah, and it's not. So this is great. This is usually a pretty major top in the start of a longer downtrend, especially on the weekly here, back testing your bullish EMA on the weekly brings you to 313. And two theses for also the fundamental catalyst for this and why it took so much size is just that Whole market's melting, but Apple isn't. Well, guess what? Rotations aren't a thing and panic selling. There is no safety. When you have when the AI trade fails, everything's gonna fail. So if I'm wrong and the AI trade fails, Apple's coming down hard with everything else, without a doubt in my mind. My other thesis was that what are you buying if you see a bounce in tech? Are you gonna buy more Apple? Are you gonna take some Apple profits and buy major dips on names like MU? Where, even if we go to the daily chart here on MU, if we're looking for a short-term bounce, you're looking for 880 minimum. You probably can come to 904 before, even if you're going to get a continuation lower. Like, this is dramatically oversold, and like our momentum's already trying to build back to the upside. So you get a single hit of a turn, not a flip, but a turn on the 2-day. That's enough to blow out the shorts, give you a pop before, a pretty substantial pop before they load back into the positions. And that's something you have to be mindful of. That would be pretty muted. It would look like something like this in SPY. Like you come back, test the wedge, pretty classic price action, and then you'd get a denial on a rollover. But this could take a few weeks to play out, especially if it's choppy and messy like it has been. And before you then get a continued dump. And it's important to note that there's even signs of this on the 2-day for the SPY, So you're getting very barcodey on the 2-day. So it's going to be really important to see how like the rest of the week finishes out. But I definitely think there's signs that, you had this panic selling and people pretty bared up into the close. All right, let's give them whiplash, back test this, and then get the real move. Like mid-August or something, and then maybe we'll do a few months of consolidation into September, and then actually like an awkwardly bullish October, November, December into a bullish 2027 as people start to realize that this isn't our 2000 moment, this is our 1995 moment, and it's still full steam ahead, baby. And I feel confident about that because of that Microsoft earnings. And even Meta. I will say Meta's continued CapEx spend was pretty muted, but the bills are already happening. The money's already been spent, and there's huge backlog business. So like, if you want to increase your margins and generate the revenue, you have to spend the money today to get that revenue in the future. And people are like, well, why isn't there money right now? I just feel like the market's being a little bit of a child who's like a naive child on like this shit takes time. So it's kind of honestly how I feel a little bit. And I think the analysts at NBT also definitely feel that way. You could kind of read our conversations in public chat. But I mean, to hear some of the smartest people I know kind of reaffirm to me where my head's been at, I like that. I like that. That definitely not confirmation bias. Jokes. Yeah. The other large position, by the way, was Oracle. I really like the way Oracle's behaving here. I'll admit that it's probably better over 124. And you guys definitely probably noticed that I actually cut the September calls. Even though the larger positions already in January, it only took like a small scrape on the Septembers. But the reason for that being, and the reason for me not adding any call positions into the close, was this dramatic TLT sell-off. And so the last conversation I kind of want to end this video on is like what happened with FOMC and why are bonds reacting this way. It's a huge, and especially if you guys are newer to markets, you got to understand this is a pretty massive shift in like mode of operation for the Federal Reserve, where in previous years, most Fed chairs were like Jerome Powell, and they kind of dictate to the market what comes next, right? And the Fed was seen as like the ultimate authority on markets. which for, I would say, some of you probably having the same thought that I would have if I heard that, which is like, these guys don't even make money in markets. Like, what makes them ultimate authority? That's stupid. But it just comes down to they have the big printer, right? They have the big print button and they have the big sledgehammer button that is raise rates, okay? And so even though I think you could easily argue that there are a dozen hedge funds and dozens of traders who are clearly better market practitioners than anyone at the Fed, regardless of their PhD. Like, they have the big buttons. So the guys with the big buttons are the guys in charge, right? But now you have Warsh stepping in, and Warsh has a completely different mode of operation where some people are interpreting this as the Fed no longer has any transparency. My opinion on that right now is that the complaint about the Fed not having more transparency in giving what their view of the market is or what they think is coming next is not what a effective market practitioner would say. Like, it's kind of a non-starter conversation to say now the Fed's not going to be transparent, because it assumes that the market is incapable of processing information on its own and does a better job of that than the Fed, right? Obviously, there are periods of market exuberance and market depression and buyer exhaustion, and there are also mechanical forces in the market. But over multi-year time frames, markets do a very efficient job of pricing things and evaluating the state of the economy and the business cycle. And so I think it's completely fair to say, like, why are we manipulating natural market forces and turning the conversation and manipulating the conversation into being about what will the Fed think about this rather than what do we think about this, right? So there are a lot of old heads who are used to being told what the Fed thinks. They're used to the Fed projections. They're used to looking at the dot plots and making assumptions from there. And they're very upset. They're they're surprisingly upset about the lack of centralization and being handheld on what they need to pay attention to get edge in the market, and because the stuff they've been doing no longer works, right? Now they have to actually learn to read what the market thinks and learn to read price action. But us as traders, this is a dream come true. Hell yeah. I don't have to give a shit about every freaking economic data point every freaking morning. Hell yeah. Hell yeah. I could just read market price action and say, well, the Fed's looking at the same stuff as me. And so they're probably thinking XYZ if they have a brain. Of course, that's the uncertainty the market doesn't know, is you don't know what they're looking at. So you don't really know if they're giving greater weight to this or that, okay? But you can still look at the outcomes and just watch things like the yields of the bonds. So I don't even think that's a fair assumption to say, because I don't think it's important to watch one single weight or to put a heavy weight on PCE or something. No, we can just see what the bond market does, what yields do, what are equities doing, and say overall picture looks something like this. Oh, there's going to be persistent inflation is what a lot of people are saying. Okay, well, we got a huge spike in oil, and it's still down almost 20%, 17% from the high. So where is that persistent inflation? Where is that? Because this looks like a massive spike that just set a higher low and it's going to dump lower. So where is it? Where is it? I don't know. Dram prices are going up, but it's not like it's affecting people's rent. There's no ripple effect. There is also the obvious thing about Warsh is a little annoying in how he answers questions. He definitely does not, in the fact that he definitely does not answer them. But it's you know, some people are a little slower and they are not adjusting well to like this is the new way of things. So circling back around to how this conversation started, all of that is why TLT reacted the way it did today, and we got that sudden plunge. And this plunge is important because it brings us to like a multi-decade lows. So if we come to the monthly here, we can see that. Now you still have to respect this price action, because if we start crashing into the 70s, we can definitely crash equities lower, and it will be a very mechanical thing that occurs. So I took off my TLT longs, which was one of like the longer dated ideas I had, because I had that position on because I was like, I think the market's overpricing rate hikes. We didn't get a rate hike, and then TLT plunges like that. It's like, okay, well, I guess I don't think I had the right reading on that, so I caught it, which is fine. And we'll see what comes in the future. I still think that we should expect cuts over hikes. And, there's some people pounding the table saying they should have hiked today. The Fed's making a mistake. And I just want to warn you guys against thinking like that. Like, it was a 6-3 decision. This was a majority decision. This was a large majority decision, to do nothing. And as traders, we know that doing nothing is most of the time the right decision. And I think it's especially the right decision from them, because even watching the way bonds reacted today, the market's still in the old mode of operation. So I actually think they're doing a pretty good job. I like it. And we'll take it as it comes. But, price action king, more than ever. So more than ever, we should have some great edge in the months to come. So let's let all this volatility. Korea is now going to also support their market. So I'm definitely looking for things to clean up. Sorry, this video is a bit longer, but maybe I even need to cut out the Fed partnership with the Fed. Anyways, I'll think about it. Anyways, God bless, guys. Discord, public chat. If you got questions, tag me in there, because that was a lot of information. And I'll be around. For another 2-3 hours to answer them. Okay? God bless.